Hi, this is Jack from Alpha Charts 365 with a state of the market video. Before we get started, this is not a recommendation to buy, sell, or hold any stock or security. This is for informational purposes only. I may hold positions in some of the stocks mentioned. Know your time frame and risk tolerance. All right, so we're going to start with the SPX chart and zoomed out just a little bit. And you see the levels that I am interested in, right? So this was the 2018 lows. That was interesting. And you see that we undercut it here. You see that this was resistance, 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 and it was support, support, support. On the way down, really didn't do much at all here. And now we're above that area. That is, I think, very, very constructive. Maybe some type of rising wedge showing up here. So we haven't broken above this area. And the 150-day EMA is still declining, even though it's starting to flatten a little bit, still declining. So I think that you're getting a lot of mixed signals from this market. The other thing to be aware of is from low to high, we're up about 31% or so. So I think that also the quickness of this move back up is, I think, important also. So just looking at this, where am I positioned? I'm actually positioned mostly in cash still. And the reason is I wasn't buying down here. I'm not catching bottoms, right? And this market never really gave me a spot to manage my risk. So what am I looking for in order to be more involved in the market? What I would love to see is maybe some type of rollover here, maybe to this 2713, 2740 level, somewhere around there. These continue to start to flatten out, and then they move back up. So a quick dip below and then back up, that would get me much more bullish in, and not that I'm not on the bullish side of things right now, but it give me a place to manage my risk. You see some good volume coming back in here with people buying. Something that has been talked about, which I've read and may agree with, is with the anticipation of things opening, this could be a buy the rumor, sell the news. So as things are opening up, it wouldn't shock me to see that second dip that we talked about, and maybe even further than we think, right? I mean, it could still come back down into this range somewhere, whether it's to this 2355 area or some other place. I could definitely see a deeper dip possibly taking place. But I think I'm a buyer on the way down because I don't think we are taking out these lows. And I do like this area as we get closer to it to manage risk against. So will I start to buy? Probably if we get into this area, yeah. But will I buy heavier in this area down here? Yeah, much heavier if we do come down here. And we may not, because what do we see here? Higher lows and higher highs, right? Definition of an uptrend. So this may just be a new uptrend that has started. The Qs have by far been the strongest of the markets. Again, this should have been the tell right here for me. I paid attention to it, but it wasn't actionable for, again, my time frame. But for this to dip below and then almost immediately get back inside this very long-term trend, right? We got this trend going back to 2009 lows, right? Back here. So we are now solidly back in here. So where do we go from here? I mean, so no one really knows, right? But I do like how this is starting to curl up. Again, a retest of this area, maybe even gap fill this, right, to 203 will give a chance for all these moving averages to really start to move up and align correctly. And then that would be an excellent place to manage risk. right over here. I mean, could we go all the way back to this 196? Yeah, sure, we could. Anything's possible, and we could rip higher. But for me to get more involved, what am I looking for? And I'm looking for this right here, this gap fill. I'm not sure if I'm going to get it or not, but we'll see. That's what I want. And now there'll be another place to manage risk in the future again. So I'm just not going to jump in and not have a place where I can manage my risk and feel comfortable with it. You know, I have to sleep at night. And if I have too much money at risk without a good management, then you know, causes worry and sleepless nights. All right, here we go. IWM, right? The weakest of the markets. And you had the double top confirmation, came all the way down here, and we're still below the 2018 lows. So that's one for the bears, right? Even though we're seeing constructive price action within this range, you know, it's not out of, hey, is this a bear flag territory, right? We can definitely make the argument that this and this is some type of bear flag that's happening, right? You know, I think that's a reasonable argument for somebody to say. Now, if we get above this area, and again, get these to start to flatten out, that would change that thesis. But it's a valid thesis that we can roll over here and maybe retest the lows or undercut it. But especially if it's a sell the buy the news, sell the buy the rumor, sell the news event. But we don't have that yet, and so that's just a scenario. But we are bumping up against this resistance, so it would not shock me if we do roll over and let these catch up. You know, so IWM, again, it's the weakest of the bunch. It's not where I'm interested in being. I mean, if I'm going to be in places, it's going to be in the Qs, right? And things that make up the Qs. So why would I want to be in weakness? I want to be in strength. Looking at the Dow Jones composite average. All right, so here, I mean, still have these declining moving averages, right? Which still makes you a little nervous. But constructive price action, again, higher highs, higher lows. I mean, that all looks pretty good. I think it needs a little bit more time to get a little bit more constructive in here. It's not at the place I want to be at. And you can kind of see where price is maybe hitting some resistance in here, this 8,000-ish range. So that would be a place. You know, I'm not sure I want to add risk again after the big move, right? So no, we didn't catch the bottom. Here's the big move, right? We're talking about 32% from lows to highs, but a retracement of that to some level. Give them moving averages time to flatten out, catch up, and then we can start managing risk. Looking at the I-100. So this is the global big cap names. And what are we seeing here? I mean, I think, you know, we have supply right here, right? Boom, 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 boom. And now we're coming up to supply. Now, are we seeing this flattening out? We are. So I think that's very constructive. But again, coming to supply, they're big caps, you know, your Amazons, your Microsofts, your your Googles, Apple, you know, that's what makes up this one. But worldwide, it includes Nestle and other outside the United States ETFs, but it's kind of dominated by the US. Anyway, what are we seeing here? Again, we're coming into an area of supply, potential supply, but we do love these flattening, moving up, starting to look like it wants to flatten. So again, a pullback here, a shallow pullback here, even maybe filling this gap right down here. I think would be very constructive. There's a gap right there, lots of gaps. Let these just finish catching up, start to really turn up, and then the breakout to happen. You know, we may go a little bit higher to bump into it, maybe, come pull back, and then break out. That would be the very bullish scenario. So again, I think the pullback is more bullish than ripping through it. I think ripping through it is actually the less bullish scenario. But again, to gather some more energy after this huge move, I think that would be good. And again, the market has been led by the big caps. I mean, look here, you know, it's a 28.45. That's a big move, just like the other just like the indices, right? A big move is going on there. All right, so let's look at some individual sectors. XLF, I always like to look at. And the question I posed on Twitter this week was, is this a bear flag or is this a new upwards channel for financials? We have the higher highs and the higher lows, right? And it's held this channel so far. You know, break down this channel and we may start testing whether it's this area or this area. Again, that area you see was resistance back in 2015, right? We ripped through it and now we're here. So again, could be a bear flag or it could be a new upward channel, something I'm watching. I don't think financials have to lead, but I do think they need to participate, meaning if they're rolling over, it's going to be really hard for the market to continue higher. Again, you're seeing a lot of downward pressure from the moving averages. So we'll see, but I think that's important. Looking at SMH, very, very strong group already. So you see the flattening of these moving averages, the curling up, starting to curl up there. Very, very constructive. Definitely a leader in my book. But is it extended? Well, sure, it's extended again from low to high. You know, it's up 40%, right? So it's definitely a leader. So could we do for some pullback? Shallow, maybe only to the 127-ish area. That may be enough, right? And then we can let the moving averages catch up. We get to get the alignment that we're looking for, and then we have a place to manage risk against. A lot of great looking names in the semiconductors, and again, as an indicator, looks very, very strong. So looking at the put call ratio. So I always look at this with a line chart, right? And the reason for a line chart is that it's a very noisy pattern, right? It's a very noisy indicator, and this only shows closing price. And one of the things that I was saying was, I don't know if 1.5 is enough of a shakeout for us to really move higher. And you know, because you're seeing on a closing basis, you know, we got to 1.6, we got to 2, right? I'm like, I think we need to be between 2 and 3 because of such a strong move down. So today I looked at just the bar chart, right? Candlestick chart, I'm sorry. And lo and behold, intraday, we got to 2.8. So maybe that teaches me a little bit of a lesson here that I have to look at both closing price and also intraday, because we did have a very capitulatory move right here. And that was on March 4th. Okay. Again, I use the closing prices and line charts because, again, it just cleans this up a little bit. But as you can see, March 4th was an interesting day. And let's look at what March 4th was on SPX. March 4th was actually all the way back here. So didn't really give us a ton of indication back then. So maybe not. We'll see. So looking at the put call ratio again, this was March 4th. And then yeah. So again, maybe line charter is the better way to go. We'll see. Something I'm still working on, obviously. And listen, we don't know. We could get another spike up here, right? If those bear flags pan out, then that may be what we're looking for to get back up to 2 for the true bottom to be put in. We'll see. We'll see. What else are we looking at? So I'm also looking at copper futures relative to gold futures. All right. And so this, again, it's a ratio chart. And just get rid of volume. All right. So on this chart, here is the 09 lows in this ratio, right? And we have now undercut those lows, boom. And now we're starting to see this constructive price action happening, right? So it looks like it may challenge this area of possible supply on the ratio chart. If we test it and roll back over, that would be, I think, another bearish leg, and those bear flags may start to confirm, or should be confirming probably at the same time. If not, this may lead it. If we bust up above it and get back into this range, or even better, this range, that'd be the very bullish turn, with copper outperforming gold. And that would be what I would be looking for to potentially, again, for a much more bullish signal. And then value line geometric index, you can see, as far as breadth goes, again, it's the large cap names that are really leading this market right now. And you can see that because we are still in this area of supply. And that's the 2016. And this was back in 2011, right? So this area of supply, we're contending with it now. Looks a lot more like the Russell, this does, than it does the Qs. And so I think that just shows how tech, and it's a narrow, maybe not the broadest of leadership in this market. And again, that would be one for the bears. That would be a little bit more concerning. So a lot of mixed signals going on right now. I don't think that's time, for me at least, it's not time to be overly bearish or overly bullish. But what I am seeing, let's look at one more chart. Hold on. And this is bond ratio, right? So it's IEI versus HYG. And so this is looking at credit spreads, and we are seeing lower highs, right, and lower lows. So they're coming back in and they're tightening up a little bit. And I think that's healthy for the market. And again, that's one for the bulls. So I've shown quite a few things that are bullish in nature, and a lot of things that could be bearish in nature. And I think that's what the market is really showing us. A lot of mixed signals. And it's very hard not to chase, especially if you're on Twitter and you're seeing all these people that are killing it. Chances are they have a different time frame than you, if your time frame is a little bit longer like mine. And I'm not playing intraday, and I'm not even, every once in a while I may play something for the week, maybe. But even that, I'm keeping it really small and light, and almost always staying in cash. Where do I see the opportunities? So areas that I am looking and creating my watch list from, here are some of them. SMH, of course, semiconductors, we talked about that, amazing. Software, I think software is really starting to look good. We're seeing, again, these moving averages starting to level out a little bit. And there's a lot of nice looking names in software. Cybersecurity looking great. I'm really excited about a lot of plays in cybersecurity that are shaping up nicely. And healthcare. I mean, almost back to all-time highs. Healthcare is obviously ripping. It looks really good. I would be a lot more bullish if I could get in, if this comes back to about this 96-ish level, right? A little retest. And then we start continuing to move higher. IBB, I don't usually play individual biotechs. I think for my personality, they're too risky, but IBB is breaking out huge now. But here's the thing, like Brian Shannon likes to say, where did it come from? It came from 92, and where's it now? At 120, almost 125, right? 35% move in a very short period of time. So not the place where, moving averages all the way down here. This breakout is not what I'm buying. I'm not buying this breakout. Now, if we move back in and then create some energy and break out at that point, that's a different story. So I'll just be wary of things like this, right? Where did we come from? Where did we go to? A little too extended for me, for my personality. And I'm going to leave you with this message. So in jiu-jitsu, Master Shark this week said something that was very interesting. So he said, we were asking questions. He does weekly videos for people that go to his gym, and not weekly, I'm sorry, daily videos. And so we were asking, how do you escape from Mount? That was the question that was posed, right? Because he was taking a lot of questions. And so he said, so don't ask how to get out of Mount. The better question is how to prevent someone from getting Mount on you. So that applies to the markets and risk management, right? And what we're going through right now. So don't put yourself in a position to take a big loss, right? You don't get caught up in FOMO. Don't get caught up with people on Twitter that may or may not be actually trading. I think that the idea is to, know your setups, know your time frames, know your risk management and risk tolerance, right? And play your game, whatever your system is. That is the most important. So it's you know don't you know don't chase, right? I mean, this is chasing. I mean, maybe we could keep going higher. We could, but we're not going to go up forever. There's going to be, in my opinion, maybe a safer or better, um, more risk manageable area than where we're at right now with this huge fast move down. We'll see. Anyway, everyone, hope you all stay safe out there and have a good week. And I will talk to you later.